Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on the descending tops candlesticks pattern. Once again, we are making these videos in a whole huge series of candlestick videos that we're putting into a couple different courses that we're giving away for free for those that follow us. If you head over to our website over at bullishbears.com, you'll see a section up here that says courses where we have a few $1,000s worth of free courses that we give away. We're a very massive community. We're all about giving back. So we continuously put more content, give it away for free to help people really learn about the stock market. And we are going to be very shortly, depending on when you're listening to this video and watching it, adding a couple of candlestick courses. So we're going to have a kind of a basic course and then a really advanced one because candlesticks, they're the name of the game when trading. Really, if they're that first line of defense, and things like trend lines and other indicators kind of layer on top of it, you need something that creates that baseline, and candlesticks create that baseline to bring in all the other indicators and draw your trends and all that good stuff. So this video right here on descending tops is going to start broaching the areas of starting to being able to draw trend lines, which are extremely important when trading. So again, depending on when you're watching this video and depending where your skill set level's at with understanding, again, we have a bunch of different stocks from basic courses all the way up to advanced courses on our website to help you get started. And again, if you want to know about candlesticks, obviously we'll be having a couple courses right under this section. So just check over on our website, bullishbears.com, and you'll see them. So now the arena of, again, starting to broach and get into trend lines. If you don't know how to draw trend lines, if you become a member of our community, again, we're only $10 a month right now, super inexpensive for all the content that we give away. We have some private videos that teach how to do trend lines. So when you're kind of looking at the big picture, right? There's single candlesticks. There's smaller pattern candlesticks, 2, 3 candlesticks together. Then there's larger patterns, right? Overall. So those candlesticks form smaller patterns, form bigger patterns. And then those bigger patterns enable you to draw things like trend lines and horizontal support and resistance areas. And that's when you get into the name of the game when trading, which is support and resistance. It's all about finding support and resistance. Buy low, sell high if you're longing, or sell high, buy low to cover when shorting, right? So it's finding all of those peaks and valleys and support and resistance levels and being able to know when to trade them. So descending tops, I'm not going to go into a whole thing on trend lines. Again, if you join our community, you'll see our private content that really gets into it. But I'm going to just show you the basics, right? I'm going to go over to a very handy resource that we like to use, Investopedia.com. Awesome resource about anything to do with the stock market. They simplify everything. So I'm just going to give you a definition, show you their version of what it looks like, and then show you some real world versions because not everything looks perfect on a stock chart. So descending tops, definition of descending tops, a pattern in charts where each peak in price is lower than the previous peak in price. The pattern signals a bearish trend in the security. So you can see here, lower peaks, right? Lower highs, called lower highs, right? So stock hit a high here, then it hit a lower high, lower high, lower high, right? So you could then basically connect these peaks and kind of draw a trend line, right? Draw a line down, and you can see it's a line down, and connect those peaks or connect those tops. So very simply, I'm going to show you a few charts and just show you how to do that, right? You can see Apple had a few descending peaks, and you can connect these peaks. See these highlighted areas, right? I can go up here and draw a trend line and show you, okay, I'm going to take this peak, which goes right down to that peak right here, which goes down to that one, which, somewhat, again, it's not going to always be perfect, connects to this peak. So you can see kind of a downtrend right here. And then price kind of falls, goes back, comes down, rejects, goes back up, comes down, rejects, goes up here, breaks it above a little bit, rejects down, comes back up here, rejects, comes down, and then finally price goes here and breaks the trend and starts to move up. So when trend lines, extremely important, very, very, very important to watch and find trends. Some stocks will have, some of the major stocks will have clearly defined trends. Some of the small cap stocks, penny kind of garbage, pump and dump kind of stocks, very difficult sometimes to find trends. So it's easier to find them on the major, companies, but obviously they have them, all over the place on small caps as well. It's just kind of sometimes more easily definable on some of the major companies. So you draw these lines and connect these peaks and then watch, price. When price breaks a trend line, it's a potential trend reversal. Now you're going to find descending tops on so many different charts. So I'm going to show you several right here. Just again, this is not a whole video on technical analysis, just showing you. Find these peaks, find these valleys, connect those dots. So this is, again, just going to be on descending tops. You can see here, draw a trend line, and again, you can kind of get really big areas of support and resistance. Let's take a look at some other ones. Let's look at Ford here, right? You can see some very pointed tops, right? Again, when a trend line breaks, it might go into another direction, and then you can draw trend lines other areas as well. So like you can see here, there's a peak here, there's a peak here. We can kind of do it, sometimes you kind of connect them down here, then you can connect up here. So you can kind of see these tops, they connect, but then they can also go out and extend other areas as well, kind of these peaks. So you can see there's a peak, a peak, a peak. There's a peak over here, then there's some peaks over here. So again, these lines are going to constantly be moving. So it's important just to kind of watch, price is up here, falls down, comes back up to these peak areas. If it can't go up and break above and it falls, that's hitting major resistance. Falls back down, comes back up here again, fails, comes back up here again, fails, comes down back up, fails, fails. And then eventually, it starts to break out and go to other tops, right? So eventually it goes and then it breaks. So you can see kind of a breakout here, and then it forms another peak and falls. No coincidence, right? Down to the other previous peaks. Support now becomes resistance. It breaks out, comes back down, retests until now it becomes and it goes into a channel. Now it's kind of in a range down here in this other channel. Now there's this other channel to contend with. If it goes and breaks back up, right? So it's connecting these peaks, and you'll find these peaks all over the place on stock charts, right? Very, very, very common. Let's take a look at GDX, right? You can see here, 1, 2, 3 peaks. Take a line, draw it down here, and there you go. Price went up, fell back down, went back up, rejected, came back down, went up, rejected, came back down. So you have this clearly defined line here. Then you can see here, price broke it, and it broke out and went that way, right? So you can see, just connect these tops, right? Descending tops down, bearish trend. And then the trend is potentially broken when it breaks out of that bearish channel that you can see right here. Let's take a look at GE. GE, you can see here, top, 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 connect the tops right here. There you go, right? Price fell down, went back up, came back down, went back up, rejected, come back down. Now you can create a new area. There's more tops down here, so you can connect them from here down here. Then you could do like here, down here, and connect these areas. Trend lines change all of the time. Connect those peaks, and then you'll get major support and resistance areas, right? And then make your lines so they extend in the future, because as price falls, or goes in the future, there might be peaks here that might come into play down the road over here. So when you extend down, eventually, if you look here, that's all this is major resistance, right? Or this will be major resistance. So eventually, if price starts to go back up again, now it's going to have this to contend with. And until this breaks out and gets above it, you're still in that bearish trend, right? Let's look at SVU. SVU. Kind of like that. VU. Right, descending tops. Kind of right here. You can see them down here. These areas kind of right here. And then you can see over here, just connect these peaks, right? Connect them going down, right? Price goes up, rejects, come back down, up, rejects, ups, rejects, comes down, up, rejects, and all the way down until price can start to break out above this. Now see, when you connect these peaks, all this price is obeying these previous peak areas down over here until it can go and break above it, right? Super, super important to be aware of. And that's how you kind of basically draw these trend lines. Cube, C-U-B-E, descending tops, you can see. Connect the lines, right? You see these tops over here. Look at in the future, that line extended in the future, and all of price is down here for a while, it comes back up, smacks it, gets rejected again, comes back down. It took all the way until way over here before it started to break out of that that downtrend, and then it goes up, and now this where it was resistance is now going to become support. If price ends up falling again, this will be a major support line. Descending tops, super important for support and resistance and creating these trend lines. So important. IMAX. You'll see these over and over and over again. Peak, 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 right here. Price goes up, falls back down, comes up, many times retests, rejects, falls back down, comes back up, tries here, fails, tries a little bit here, fails, goes up here, gets a bit over, fails, comes back down, kind of breaks out again, fails, goes back up here, starts to break out, trades sideways, what's it do? Falls back down, now it's support down here, and now it starts to fall, and then you got to start connecting these lines now, right? So now there's other channels as well. You can connect these lines as, this with up here as well. Just connecting all of these peaks that, there's horizontal support and resistance, and then very important, these trend lines, right? And you can't get these trend lines without having candlesticks, right? You need the candlesticks. You need peaks and valleys to connect them to, right? Super important. RDUS, RDUS. This will be the last one. 1, 2, 3 peaks here. Comes out, breaks out over here. Look, it comes back down, retests. Now it's support, right? Resistance, now support. Goes back up, comes back down again, retest, goes back up. Now you got to go and connect other lines again. There's new lines that are formed that you can start drawing other areas, right? Just connect these peaks. Sometimes they break up just a little bit, come back down, break out a little bit, come down, up, down a little bit. And then you got to zoom in and see other patterns like, oh, that's a double top, right? Very bearish potential pattern. 2 peaks that can't break above each other, like an M, right? Double top, then you have the bottom and the base there. Connecting all of the dots, looking at the patterns, seeing the story that these patterns tell, then learning things like horizontal support and resistance, trend lines, seeing the big picture overall. And when you connect all of these dots and you put them all together, this is trading. Now, everything is not 100% foolproof. There's nothing that's 100% foolproof. The best traders in the world still fail 30, 40% of the time. But when you learn all of this in this big picture, it helps to put trading odds more in your favor. So learning trend lines, one of the most important things you'll ever do with trading. Finding the trend, is it overall in an uptrend or downtrend? Then finding the patterns within the big overall trend, and then the patterns within the patterns, and then trading accordingly while minimizing your. So if you are not a member yet of our community, feel free to come and join us. We are the Bullish Bears on Facebook. Come and join us, like and follow our fan page. If you haven't been over to our website yet, we have a few $1,000s worth of courses over here, soon to be adding more with the candlesticks courses. We have a day trading room, a swing trading and options room for those that love swing trading and options trading, trade alerts, watch lists. We have a whole private section, members only account with all private content, private videos on top of all the free courses. And if you can see right over here, just click on the subscribe button. You will see that we are only, drum roll, $10 a month. Make it affordable for everybody. Save yourself thousands of dollars in fees and getting started in the stock market with all of our courses. Save yourself hundreds of dollars a month in membership fees that other trading companies cost you. Come in, relax, no pressure, $10 a month, you know, get yourself acquainted, learn the stock market without having all of that pressure. Again, we're only $10 a month. We provide you lots of content to help you to become a good trader. So hopefully this video helped you, and we will see you in our community. Enjoy.